We already knew that because we credited cash, so we will debit the petty cash. If we were to post this out, then in this center area, we have the beginning, the adjustments, and the ending. We could see what happens to our trial balance as well as the accounting equation. So we can put our cursor into petty cash in H6, and say equals, and I'm going to go ahead and point to the petty cash, which is the debit. And when we hit enter, it goes from 0 up to 250. We're out of balance because we need to post the other side, and then we will go to the other side, which will be cash, up in H5 equals, and go to the cash, which is the credit. That's a debit, that's a credit, that's the opposite. It's going to make this go down and put us back in balance down here. So let's take a look at the next transaction. Next transaction says is May 15th, prepare a company check to replenish the fund for the following expenditures made since May 1st. So we know that we are going to replenish the petty cash. Petty cash has been now used, so it must be less than 250. We're going to take more money out of the checking account, put it into the petty cash. So the question then is cash affected? It is affected. In this case, cash is going to be going down because we're taking another check will come out of cash and go into the petty cash. So we're going to say as of 5/15, we know that cash is going to go down. Now, I know that that's going to be a credit, and I know this journal entry is going to be fairly long. So we might want to put that basically on the top at this point, even though it's going to be a credit. Or we can estimate how many rows that we're going to have and put it on the bottom. So I'll estimate how many rows by saying there's going to be like 1, 2, 3, 4, 5 transactions. I'm going to put it down here on the 5th row under here and assume it's going to go on the bottom. Now we could try to figure out how much that will be, but let's think about the other side of the transaction first. We know that's going to be a credit, so we're going to have to debit something or multiple things. First one says we paid $78 for janitorial services. So if we look over here in terms of our trial balance, janitorial services, looks like it's right there, has expense next to the name, it's next to all the other expenses. It does sound like an expense because it's something that we need to use in order to help us generate revenue in the same time period. All these expenses have debit balances. We're going to do the same thing to it because they only go up, expenses only go up, which in this case would be another debit. The expense is going to go up, it's going to bring net income down because net income is calculated as income minus expense. And the amount for the janitorial services are the 78 in this case. Next one, B, paid $63.68 for miscellaneous expense. So someone didn't want to tell us what the, so miscellaneous expense, again, if we look through here, we can see that it says expense right here. It's next to all the other expenses. All expenses have debit balances. They generally only go up. We're going to make it go up again then by doing the same thing to it, which in this case would be another debit. So we'll debit the miscellaneous. C says paid postage expense for $43.50. Once again, it tells us it's an expense. If we have the trial balance, we can see where that expense is at. So we're going to go over here and look for postage expense. We can see it has a debit balance, and all expenses have debit balances, and we're going to make it go up by doing the same thing to it, which in this case would be another debit. So we'll debit the postage expense, and then we paid $57.15 to the county for advertisement. All right, so we got advertisement happening. Once again, that does sound like an expense, something we use in order to help us generate revenue in the same time period. There's the expense. They all have debits. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So we'll debit that expense there. So let's put the amounts in there. So it was $63.68, $43.50, and $57.15. Now we're going to replenish. So we're going to credit cash, and we're going to put that money back into these expenses in order to replenish the cash. So we're always basically at this 250. But the question is, do these add up to the 250? We're going to credit cash and we're going to debit these expenses, replenishing the petty cash account for this amount. But if we add these up, they add up to this amount, and we're saying that the amount counted in petty cash was $19.17 remaining in the petty cash. Therefore, if we want to bring the petty cash back up to the original 250, we would have to do the calculation here. We're going to say, well, petty cash needs to be at 250, and we're saying we're looking at petty cash and it's only got 1917 in it. Therefore, petty cash would need to be replenished with a check written from the checking account of 230.83. So that calculation I'm going to say is a negative, so it turns out to be a credit balance of the 250 we want in there minus the amount that they say is left, 1917. And we have this here. All right, and there's our 230.83. Now, in a perfect world, these expenses would tie out to the amount that we need to replenish by in order to get it back to where we want it at 250. But in this case, there's an overshort amount, meaning our receipts don't line up exactly, and we're off by the 242.33 minus the 230. So we could sum that up by doing a journal entry like this. We can say the negative sum, meaning just take all this and flip the sign. That's what that's like a plug formula, and that's what we need in order for the credits 242.33 to equal the debits, the 242.33. We could have also done that by adding these up, which add up to the 242.33, and subtracting it, in a calculator. 242.33 minus the 230.83 means we need a credit in order to get this up to that. So we're going to call that the cash over short, meaning this could go either way. We could have had more or less. That's the difference that didn't get accounted for in some way, and we're just going to write it off and deal with it, and hopefully it's an immaterial amount. If not, we're going to have to track it down or figure a better way of a system, or not put so much money into petty cash. All right, so let's post this out. I'm going to go to the janitorial area here, equals, and we'll post this one. That's going to bring the expense up, put its out of bounds, bring net income down. We're going to go to miscellaneous in H14, equals, point to the miscellaneous. That's going to bring the expense up, put it back in bounds, bring net income down. Then we're going to go to the postage. Postage expense here, equals, point to the postage. That's going to bring the expense up, will remain out of balance, and bring net income down. Then we're going to go to advertising. Advertising down here in H16, equals, point to the advertising. That will make advertising go up, the expense goes up, and brings net income down. Then we're going to reduce the cash. There's already something in cash, therefore I'm going to double click on it. I'm going to go to the end of it and say plus, and then point to that 230.83, which will bring this balance down. Now we're off by that overshort amount here, so we're going to go to the cash overshort in H17, equals, point to that credit, and notice we have a credit balance in what looks like the expense area, because in this case we have kind of an exception to the rule where we have this overshort item, and because it's immaterial, we're going to do whatever we need to do basically to put it back in balance. So number 16, or May 16th, then says, prepare a company check for $200 to increase the fund to $450. So now we want more cash in our petty cash fund. Inflation happened and we need more spending cash in the petty cash. Then the $250, we want to bring that up to by $200 to $450. So that means that we're going to take, is cash effective? Yeah, we're going to take money out of the checking account. We're going to write a check for $200, reducing cash and putting it into petty cash. And cash has a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. So I'm going to copy that. That's where the date's going to go. I'm going to put it on the bottom because credits traditionally go on the bottom. We're going to put the date here being 5/16, and then we're going to debit something, and that debit, of course, will be petty cash, hopefully bringing this balance up because that's a debit. If we do the same thing to it, which would be another debit, that would bring it up to the 450. So the debit and the credit is going to be for the 200 here and 200 here. If we post that out, what's going to happen? Hopefully that will go up to 450. Let's see if that's the case. So I'm going to double click here. There's something in cash already, so I'm going to double click on it, go to the end of it, plus I'm going to post the credit to the cash account. And then there's something in petty cash. I'm going to double click on it, go to the end of it, and say plus. And then we're going to go to the petty cash. And when we say enter, hopefully that goes up to 450 and puts us back in balance here. And that's what happens. All right, so now we're going to go to 531. The petty cashier reports a $288.39 cash remains in the fund. A company check is drawn to replenish the fund for the following expenditures made since May 15th. All right, so now we're going to record the replenishment once again, and we know that the replenishment is going to come from the cash account here. So once again, cash is going to go down. We're going to write a check from petty cash, put it into, we're going to write a check from cash, the checking account, put it into petty cash. That's a debit. We're going to make it go down with a credit. again, we want it on the bottom, but there's a few accounts here, so I'm just going to estimate once again that it's going to be about 1, 2, 3, 4 items down. And again, if you put the petty cash, if you put the cash on top, it wouldn't really have a problem as long as you put it in the credit balance, but traditionally the cash should go on the bottom. So we could do the calculation of how much it's going to go down by now. We could say, well, we want to bring it back up to this 450 minus what we say in the cash is in there at 288.39 means that we're gonna have to write a check for 616.61. In order to do that calculation here and make it a negative number, I'm going to say negative of, and I'm going to put brackets around it so it flips the sign of the calculation we put in there. We want 450 minus the 288.39, and there we have it. So there's there's what cash should go down. I mean, it should be replenished by. Then the expenses we have should add up to that, but of course they won't. That we'll have an over short account that we'll have to adjust for. So F says postage expense of 48.36. So once again, it's an expense. Below the blue line, we have revenue and expenses, and we're looking for postage. And notice all the expenses have debit balances, and we're going to make them go up because they always go up, and therefore we're going to do the same thing to it, which in this case would be another debit to the postage, and the postage was for 48.36. Next thing, G says reimburse the office manager for business mileage. So business mileage we could be an auto expense, could be business mileage expense. The name of the expense account depends on the accounting department. But we see that it has a debit balance, and we're going to make it go up once again by doing the same thing to it, which is another debit. The expense goes up, bringing net income down over here, and that is for $38.50. And then the next one was for paid $39.75 to deliver merchandise to a customer's terms FOB destination. So delivery expense in this case. So if we look at the expense area, we can see that we have delivery expense down here, has a debit balance. We're going to make it go up like it always does because expenses always go up, so we are going to do the same thing to it, which in this case would be another debit of 39.75. Now, the debits you would think would equal the credits, the amount we need to refund the amount by, the petty cash by, but of course they do not equal. So they're out of balance here, and we have a difference of, we can say it's these debits add up to the 126.61. So we've got 126.61 minus the 616.61 gives us the $35 difference. In this case, the debits need to be increased. So again, this is going to be a little bit out of order because I'm going to put the plug on the bottom. So when you put it in the connect, you probably want to put it above cash. But I'm just going to show you that if it's out of order in a journal entry, it's really not the end of the world. I'm going to do this with a negative sum function as long as we have the sign going the right way. So we can see all the debits, these three, plus skip that one, 616.61 equals the credit. Now again, in a perfect world, we should reorganize those and put this up there. But like I say, if this plug entry being on the bottom is helpful to see, which for me it is, to me that justifies it being out of order in terms of all the debits being on the top. So that is an exception kind of to the rule in my opinion. So then we're going to go ahead and post this out, and then we're going to go to the postage expense. Something's in it. I'm going to double click on it, go to the end of it, and say plus, point to that debit, and that will increase this amount, bring net income down because it's an expense. We're going to go to the mileage, so we're going to go mileage here, equals, point to the mileage. It's going to bring this up, bring net income down. And then we're going to go to the delivery, it's down at the bottom, and say equals, point to the delivery, bringing this up, bringing net income down. And then we can go to the cash, so I'm going to double click on the cash at the top, go to the end of it, plus, this is a credit, bringing cash down. And then we have this $35, it's a debit now. So notice this is a credit. That means if we debit it for more than what's in there, it's going to flip it going the other way. And so once again, this is that weird account that could go either way. Notice that this one increased net income, which is weird, but the reason we did that is because it's an immaterial amount and we needed the plug in order to make this work. And this way, this time, we're going to say plug, and it goes the normal way. this way. And you would think that's what normally happens. You know, it's usually usually the you know, the expenses, there's more of an expense that we didn't record somewhere probably, right? And so therefore it's kind of like a miscellaneous expense account, an added debit account which reduces net income. All right, and then the last one is going to go the May 31st. The company decides that the May 16th increase in the fund was too large to reduce the fund 50, leaving a total of 400. So now we're saying that we don't need 450. You know, there's inflation, but it's not that big of an inflation. We need to bring our petty cash fund back down to an even 400, because when we brought it up to 450, then we were you know, we had this $35 unreported expense, and it's getting out of hand. So as of 3/31, we're going to bring it down, and so now we want to take it out of the petty cash and put it back into cash. We're going to take $50 out of it, keep the level of petty cash at 400, move that 50 up to cash. So cash has a debit balance, and the checking account's going to go up this time because we're going to go over to the ATM and put this $50 into it. So we're going to make it go up by doing the same thing to it, which in this case would be a debit of that $50. And we're going to take the money from the petty cash account, bringing it down to an even 400 that we will then be using. And so we're going to copy that and paste it there, and then hopefully we can get closer to our overshort account in the following month if we're only managing the 400. So then we're going to double click on the cash, going to go to the end of it, say plus, we're going to go to the debit, increasing cash by the 50, then we're going to double click on this. Once we post it, that should go down to 400. That's our goal. So we're going to go to the end of it and plus, and post the credit, and that should put us back in balance, put us at 400, put that back in balance, and it does so.